Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. Earnings, with a little bit of economics thrown in, as well as an almighty Barney between the government and Facebook. That's the week that was. Let's start with markets. Wall Street rose initially, only to fall back as the week went on. Global equity markets are being driven by the vaccine rollout and expected economic rebound. Asian markets have been particularly strong, with Japan's Nikkei hitting a 30-year high during the week. China's main market in Shanghai hit its highest level since October 2007. Australia and European markets have been strong, but not to the extent of North America or Asia. The local market ended lower after a big jump in the first couple of days of the week and then a slide in the final 3 days. Trading was dominated by earnings results, which I'll go into shortly. One company that didn't announce anything to the market, but did surge, was Buy Now Pay Later Group Zipco. Its share price has doubled over the past month and was up nearly 30% in the first part of the week. Extraordinary. The ASX asked what was going on. The company had no answer and the share price fell again, though not as much as it had risen. Funny old week for oil. The dominant story was the big freeze across much of the United States. Snowfalls in Texas aren't normal, and they've triggered the closure of 40% of production in the world's biggest economy. Brent crude is trading around 13-month highs. Gold prices continued to trend lower, slowly. That's hurting some of the big gold miners' share prices. The Aussie dollar didn't do much this week, trading around 77.5 US cents. And Bitcoin had a cracking period, hitting a new high above 50,000 US dollars per unit. And I always love the opportunity to talk about bond yields. They're rising, well, at least 10-year bond yields are rising and pushed beyond 1.4% in Australia. That means investors think there's a sniff of inflation around the place, even though the Reserve Bank doesn't think so. What it means for most of us is that long-term fixed interest rates, think about mortgages, will rise. In overseas news, Donald Trump's 5-day impeachment trial ended with the former president being acquitted, but his Republican Party is in turmoil, split between the supporters and the detractors of the former president. And the Financial Times reported that China was exploring whether it could hurt US defense contractors by limiting the export of rare earth minerals that are crucial for the manufacture of F-35 fighter jets and other weaponry. Back home, the big economic story was the labour market. The unemployment rate last month fell to 6.4% from 6.6% in December. Around 29,000 new jobs were recorded. The labour market and wage rises are critical to future monetary and fiscal policy. While things look pretty good at the moment, the rubber will really hit the road when JobKeeper ends next month. That's when we'll find out whether the employees of the 1 million or so people receiving the government subsidy can keep paying people without support. Much of the week was dominated by earnings season. Where to start? Well, let's go from huge to big with a few smaller ones thrown in. It was a good week for the banks. Westpac and ANZ reported growth in cash earnings, while National Australia Bank was solid. The number of frozen loans were lower than last reported. Profit margins were relatively stable. Westpac and ANZ were pretty upbeat about the economy, while NAB was a little more cautious. The tide on the banks seems to have turned after a dreadful couple of years, which started with the Hayne Royal Commission and ended with COVID-19. The sector is back. ANZ's share price is nearly at pre-pandemic levels, while the other three, including Commonwealth Bank, are just 5 to 6% below those levels. Amazing week for the big three miners, and especially shareholders of the diggers, who received record dividend payouts from BHP, Rio Tinto and Fortescue Metals. Andrew Forrest, founder of Fortescue, will receive a $1.6 billion payout for owning so many shares. Soaring iron ore prices underpin the strong results for the December half. There are a few mishaps. BHP's coal business is struggling. Fortescue's new magnetite mine is costing much more than it wanted it to. Rio is still working hard to recover its image after blowing up 60,000-year-old rock caves last year. But the bottom lines are looking healthy. Conglomerate Wesfarmers is booming on the back of its Bunnings business. That's pretty good alliteration there. The COVID-inspired do-it-yourself boom has been good for the group. CSL, which not long ago was the country's largest company, had a good 6 months thanks to its influenza products. But one challenge is that the pandemic has slowed the number of people donating blood. Supermarket giant Coles came out with strong results, but its boss, Stephen Kane, warned that the lack of immigration and tourists in Australia will damage the economy for years to come. Australia will lose 2 to 3 years' worth of new arrivals, and Mr. Kane is worried about the long-term impact of COVID-19 on the economy. The oil and gas companies have had a dreadful earnings season. Big write-down of assets that just aren't worth what they used to be. Low prices, weak demand. It's been a shocker. Woodside is a gorilla in the local oil and gas industry, and it lost more than $5 billion in 2020. Ouch. Santos lost $450 million. Energy companies were little better. Origin reported a big drop in earnings to go along with AGL last week. Tough thing for these guys is that there's no prospect of higher wholesale energy prices in the immediate future. Coca-Cola Amatil got a revised bid from its suitor, Coca-Cola European Partners. The 6% increase in price looks enough to get the deal over the line. Retailers JB Hi-Fi and Super Retail Group and medical gloves and protective clothing maker Ansell, hearing implant manufacturer Cochlear and pizza group Domino's all reported good or very good profits. Online property group Domain disappointed, so did insurer QBE. Treasury Wines is suffering from tariffs on Chinese exports, while Tabcorp's profit was lower, notwithstanding a surge in online gaming. And the property groups reported lower earnings on the back of rent relief programs and revaluations of buildings. It's been a tough time for the real estate investment trusts. The exception to prove the rule was Goodman Group, which said profit surged. It mostly owns industrial assets, all those big warehouses that look after the goods bought online. Most of the corporate news was about earnings, though there were some other stories. The fallout from the Bergen inquiry into Crown Resort's suitability to hold a casino licence continued, with Chief Executive Ken Barton stepping down and Chair Helen Coonan stepping in, at least on an interim basis. Still a long way to go on that one. And Aries management had been interested in buying AMP, but last week opted out of any due diligence process. But it's emerged that the US group is still interested in AMP Capital, the fund's management part of the business. Now I get to the point where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was all about the coronavirus. The Therapeutic Goods Administration gave the green light for the AstraZeneca COVID-19 vaccine. That's the one which the federal government has agreed to buy 53 million doses of. 50 million of them will be manufactured by CSL here in Australia. The vaccine rollout is due within days, with jabs of the Pfizer vaccine to be initially given to health workers. Around 3 million people will be given inoculations by the end of June, and by October, anyone who wants to be vaccinated should have gotten one. The sleeper story also comes from the coronavirus world, and it's a good news story. Coronavirus numbers are falling across Europe and the United States. California, for example, reported fewer than 5,000 new cases on Thursday, the lowest daily figures since early November. Around the world, the reported daily coronavirus infections have been dropping for about a month. On Tuesday, the number of cases globally, 351,335, was the lowest since mid-October. Vaccinations are being rolled out, with Israel the poster child of success. It's the sleeper story because, at least in Australia, the decline in COVID cases isn't getting the attention it should. Mind you, there have been 110 million infections globally and more than 2.4 million deaths. The most remarkable story is the fight between Facebook and the media companies and government. When big companies threaten to leave a market, no one really thinks they will. But Facebook called the federal government's bluff and said it won't allow sharing of news content on its site in Australia. On Thursday morning, Facebook boss Mark Zuckerberg and Federal Treasurer Josh Frydenberg had a phone call, and the next thing, Facebook pulled the pin. Zuckerberg is more worried about the precedent that would be set if it agreed to follow a government code of conduct and pay for content. The social media giant's business model is based on not paying for content. Prime Minister Scott Morrison called Facebook a bully, and charities and essential service pages got caught up in the carnage. But in the end, I'm just not so sure it's going to make that much difference to anyone. The other big tech giant in the government sites was Google, but it said it would pay for content and did deals with 7, 9 and News Corp. Amazing story. My favourite story of the week involves cars, and I'm in no way a rev head. I judge cars by their colour and not much more. In fact, my last 3 cars have been what I like to call pragmatic white. Anyway, The story involved the list of the top manufacturers in terms of road tests, reliability data, owner satisfaction surveys, and safety performance. The magazine, Consumer Reports, is important for vehicle makers. And this year, the number one ranked manufacturer was Mazda, followed by BMW, Subaru, and Porsche. Honda made the greatest inroads, up 10 spots to number 5. Toyota, Chrysler, and Buick all improved as well, not so Kia, Hyundai, and Tesla. Second prize in this section goes to all the small retailers who have recorded strong profits as a result of lockdowns or at least people holidaying locally. Breville, Adair's, Shaver Shop, and Bull Bar manufacturer ARM Corporation fall into this category. And that's everything you need to know from the last week. Hope you enjoyed it. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.